All right, everybody, Stocks by the Numbers, welcome back. And I just did a video updating two kind of longer term Buffett method plays. And now I wanted to look at actually two kind of shorter term plays that ended up developing just over the last couple of weeks. And I spoke about them. They both seem to have decent growing revenue numbers. And that's what I always say, in my opinion, look for the growing businesses, look for the growing revenue. Let them form these patterns and sell off. You want them to sell off, in my opinion. You want them to remain quiet. That way, here towards the bottom, you can accumulate shares, build a position in a brand name, so to speak, company that's kind of on the up and up that you feel we're buying here at these levels at either a fair value or a discounted value, and then you just kind of wait for that breakout. And the first one I wanted to look at was Sofi Technologies, ticker symbol SOFI, listed here on the NASDAQ. And this stock was looked at June 14th. June 14th video titled 5% drop today, but now is it on sale? Which was kind of the point I was driving home. I said, in my opinion, here you can see a stock was sitting here at about like 6.5. We spoke about this long-term wedge. I said, in my opinion, we're kind of near the bottom of the wedge, right? Of course, we could go lower and we could kind of step down towards the bottom of the wedge following the bottom trend line of the pattern. And then we spoke about earnings we know coming up in about 2 weeks from today. It was about 6 weeks from this point. But you can see the stock continued to drop down, touch the bottom trend line of the wedge, made new lows at about 620, rebounded a little bit to 667, got back to that fib, stepped back down, retested the bottom trend line of that wedge, made new lows at 615. Now the stock's almost at 8, right? So from 615 to almost 8, obviously the breakout just happened over the last week or so. So in the immediate short term, you're up big. But again, even a situation like this, even if you want to call me out and say, oh, 650, it went down first, then it went up. I mean, I guess you can say that, but also on the flip side, I can also respond and say, if you really listen to my opinion and the way I would have personally played a lot of these situations, this is why I speak about the piecing in strategy, right? So if you bought in here at 620, with 20%, even 40, 50% of what your position wanted to be, you could have gotten in here at 620, 6.25. You see it run back up to 665. So you're like, okay, I made a good call. Boom, I'm up. Then it sells off and it goes back to and even lower a couple of cents from your original cost basis. What do we always say? If I liked it at 620, 625, I'm going to love it here at 615 at new lows. We just touched the bottom of the wedge. So even if we bounce again and come back down, it's only going to be a handful of cents. And then we're going to potentially break out with some momentum going into earnings. And I should be up in the next couple of weeks. So, basically you could have had a cost basis of, we'll call it 6.25, and now the stock's sitting here at 785, breaking out of this wedge, getting basically back up to this previous high that we haven't seen since the tail end of April. So again, was it an immediate trade that Friday, I maybe helped point you in the right direction on a stock and made you 800% that week? No, that's not what happened. But again, if you're able to afford time, then this was technically a very, very simple, easy, stress-free play to kind of, quote unquote, in my opinion, ensure profits, right? That's the goal. And again, I know it's slow and I know it's painful, especially when you make a right call, but you bought time. So, and then you go back and you're like, oh my God, look at the calls for this Friday. Look at the calls for next Friday. They're up 450%. I'm only up 90%. I'm only up 120%. I could have made bank. I knew it was going to happen. Oh, I got to trust myself. And then what happens? You think about that previous trade going into the next trade. So it manipulates the way you look at the next trade, because now you're trying to play that short-term explosion because you think you're a financial genius and you want to make, 1,800% gains overnight. And then what happens? That stock consolidates, that stock keeps dropping, you end up taking a big loss, it expires worthless, and then usually what always happens? Then the run and the pop you expected to happen happens right after your options expire, because you were right, but you just did not allow it enough time to kind of, quote unquote, in my opinion, ensure that the move can happen. You didn't ensure to give it enough time to allow the move to happen, to basically lock in and secure that profitable trade that everyone saw. Everyone saw. We all knew this was in the big wedge and the run up and the pop out was probably going to happen. Of course, you had other people, oh, it's not doing anything. It's hitting new 52-week low. Okay, great. It was at new lows. It was at 615. It was out of everyone's radar. It did nothing for 7 months. You forgot about it. You lost faith. Boom. Now it's at 8. Now what? Now what? Now you got earnings coming out, right? So it could potentially consolidate, flag down a little bit, bull flag, boom, pop up, take the next leg higher going into earnings. Now it's at 8.5. What if they beat earnings? Now it's at 9.5. It's at $10. See the way it works? And why, in my opinion, was this more of a secure play is because we technically have a growing business that more times than not comes in above expectations, is growing nicely, was in, again, a consolidating downtrend, forming this wedge, and we had an opportunity to get it near the bottom of the wedge. Were we going to look like a genius and buy it right here at 615 and never see it go lower? No. Because again, if you allow it enough time and you're confident in your analysis, then even if you buy at 615 and it drops to 590 and then starts running, it doesn't matter because you know what is potentially inevitably going to take place. And here is the breakout up to almost $8 a share. So anyone who got in at 6 and now you're almost sitting at 8, I mean, congratulations, because just over the last, 3-4 weeks that took, now you're up 33%. And again, that's in shares. So if you were able to buy calls with a month or two of time, obviously you probably did pretty well. But we'll look at stock charts real quick for this one, and we can see RSI now a little high here, right? We're sitting over 75.5. The stock just went on a nice big run up, and you can see that it bounced up and it closed above that 200-day moving average. And then today we have another big pop up here and it goes green again, right? So we're riding high here, the top of the wave. And again, sometimes, the Bollinger Bands and the moving averages, a lot of these indicators matter, but also, again, when you have a long-term pattern setting up, now you have to let it break out, spread its wings, and fly a little bit, right? So the RSI on the daily is a little bit high, but for all we know, again, it's a small cap, really brand name in the space that a lot of people were pumped about. A lot of people were buying shares for the long term. A lot of people were trying to time the dips and buy some calls and, waiting for that, confident bounce back that they believed in. So this was a trader stock. This was an investor stock. So they calm it down for 7 months. They let you forget about it. And now it explodes when no one's looking. So, shout out to anyone who kind of saw the writing on the wall with this one and positioned themselves on that dip. Look at that big consolidating drop here for quite some time. But even going back from when the ball dropped, basically the wedge we were looking at, boom, we dropped down and then bang, there's the pop up. And you can see 50-day moving average now on the weekly, 771. Stock closed here, 784, technically still bullish. Hit a high of 791. Top Bollinger Band on the weekly, 793. So we may potentially get a retest. And on the longer time frame here, almost similar to what we saw with Campbell's, I think we just looked at, but not exactly because it's a little lower. We can see RSI on the longer term time frame, 55. So we still do have potential to keep climbing. And again, this was a long-term wedge, so now we might have kind of like an intermediate rise. Not just a short-term rise, intermediate rise with the earnings on deck too in about 2 weeks. And we also had the MACD now cross to the upside on the longer time frame, sitting down in that wedge for about 7 months. Other company, The Honest Company, ticker symbol HNST. Whew, look at that breakout. Let's get you to date. This was recently. Looked at The Honest Company, June 28th. So this one happened even faster than SoFi did. So we're here June 28th. We spoke about the descending wedge. I looked at the numbers, which I like to do. Market cap still on these highs, sub 400 million. We were looking at how the profitability jumped up positive. And then even though it pulled back negative, it's still, coming in drastically above analyst expectations. Look at that, kind of slow and steady, climbing up that revenue year over year, remaining steady, slightly getting above that 90 million milestone and then pulling back here. Profit margins climbing up minus 20% plus up to positive, and now only minus 1.6%. So what happened? We're looking at a growing business in the space with growing fundamentals, potentially viewed as undervalued in the market cap, that was forming a similar descending wedge over several months, got quiet, went out of everyone's radar, and now boom, we're breaking out, we're popping out of the wedge. Look at that volume coming in right there as we break out of that apex on that wedge. And you can see June 28th, that was when we looked at the stock, and I mentioned kind of all this, and I said, in my opinion, probably this line here, 3 3/4, should be no problem. And over time, $4 or $5 really shouldn't be an issue for a company like this with the solid fundamentals, stable growth, right? I said, in my opinion, I'd be a buyer. And you can see this was at about 280, 290, and the stock right now sitting at $4 a share. So a phenomenal percentage gain, not only on shares, but obviously on options as well if you wanted to position yourself. But I did mention some previous stories in the past, my personal experience on a lot of these very, very cheap stocks. Sometimes the options don't really have the type of reaction that you feel it should. And because it's so cheap, again, stock was 280, 290 a share, right? So you really could have just piled into some shares, and you wouldn't have been, under on the clock, under the gun, so to speak, and you could have just kind of sat, eliminated some of that stress. Now you went from 280 to $4. What are we talking? We're talking high 30, potentially 40% returns just over about the last 3 weeks, not even. So again, I tell you, some people use advisors on Wall Street and they trust them with their lives. And the average advisor is kind of showing their clients, I'd say, about 10 to 15% a year if they're lucky. And this stock climbed about 35-40% in 3 weeks. Even on the longer term time frame, again, we just looked at PM, Philip Morris up 25% in the last 3 months. So whether you want a couple of weeks or a couple of months, these plays are out there, right? And this is why you have to do your due diligence. You have to dot every I, you have to cross every T, try to cover every base. And then when you have a situation like this with pretty high conviction and pretty high confidence, if you want to do the option side, all you really have to do, in my opinion, is buy enough time to allow it to have that move. And then you do a little dance, make a little love, and secure profits tonight. Switching over here to stock charts real quick. We'll look at Honest. I'll let you guys go. So we can see same situation. We're potentially overbought here on the daily time frame and still have a little bit of room to go on the weekly time frame. But you can see we were in this big downtrend here for several months, got below the moving average, tried to retest it, and then boom, we got up above the 50. We dropped back down, retested it, and now started breaking up and climbing up above the top Bollinger Band, 367. Stock closed 397. We have the trumpeting. So now we're going to see potentially the curling and the rise of the bottom Bollinger Band as the stock maybe starts to calm down. But again, in my eyes, it seemed like it was really beaten up. Seems like a solid business. And again, short time frame, maybe overbought. But on the longer time frame, looks like still has a little room to grow. Look at that MACD just starting to curl up here, flying straight up north. And RSI here, 83.6 on the daily, potentially a little overextended. But on the weekly, again, we do have a little bit more room to go. And you can see top Bollinger Band on the weekly, 448, with the RSI sitting at 64 1/3. So maybe we pause for a day or two. But in my opinion, I think we have the potential to go about another 10% higher. And we can touch that 4.5 mark and test that top Bollinger Band. And we'll take it from there. And again, on the longer term time frame, it seemed like a bad situation, but you can see, look at this perfect wedging over the course of 4 or 5 months, coming right down to that 50-day moving average on the weekly, and then that's where the apex hits and we start climbing up and breaking out. Look at that, right to the mid Bollinger Band, and then we touch it real quick to retest and then spike up to $4 a share. MACD now crossing to the upside on the weekly time frame. So HNST, even after this run up, in my opinion, I like it. But of course, if you're a subscriber of this channel and you have notifications turned on, you saw the video that we did. In my opinion, I personally gave it a green light, and stock was sub 3. Now it's at 4. So there you go. And I'm going to end it there because I probably spoke for longer than I wanted to. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. YouTube loves that stuff, so take a minute and do that. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that these markets, they're rocky, they're volatile, they're very uncertain. Dow hits highs, NASDAQ takes a 3% haircut. I get it, I understand. So I want to wish all of you the very best of luck. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.